Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. The key feature here is the late April to date descending wedge pattern, currently at 23.95 to 25.24, highlighted in dark blue on my daily chart. This morphed from an original sideways triangle into a descending wedge pattern 3 weeks ago. Now, the core of the recent support had been the 38.2% absolute Fibonacci line at 24.88. However, 2 weeks ago, an attempt had been made to break down through it, but this attempt was halted, as just below the Fibonacci line was the rising short medium moving average, currently at 25.18, which acted as a rising support and last week as an uptrend. I'm sure this surprised some of the bearish community out there, but rising up and reinforcing the 38.2% Fibonacci line, but that is what it did. Why do I think it was a surprise? Well, because 2 weeks ago we had a weekly key reversal up, a sign to me of some unexpected unwanted short covering, as it did not show up on the London contract to confirm it as a general bullish move. The action was enough to push up the market through the upper time, though initially not enough to close over it, as 2 Fridays ago we had a shooting star pattern, type 1 bearish. At the time, the March 2012 high at 26.20, with some nearby resistance at 26.13, plus congestion early May around those same levels, had capped the rise. However, last week we did finally have that break higher, over the upper trend line. So where does that leave us now? Well, we seem to have a confirmed break above and out of the descending wedge pattern. Thus, we can look at potential targets for such a pattern. Hence, a primary target X is in the 27 even area, with a secondary target X1 in the 28 even area. This leaves us with just the big picture items. And here we have an interesting pair of potential pattern ideas. The first idea is one I've previously put out, and that is to look at the action since mid-March as a possible bullish halfway hesitation. We are not yet near to confirming this, but it is a reasonable idea. If that were to be the case, then on top of the descending wedge pattern higher, we could see a move of possibly a full 7 cents. This would be quite extraordinary should it occur, and one to bear in mind. The contrary is that we form a double top on the April high at 27.42. Thus the action there, and even up to the target area of X1 at 28 even, would be very interesting to see and follow, should we get up there. However, we will have to wait and see how that all plays out, if we even do get up there. Ice Europe white sugar in London. There are a number of possibilities in this daily chart. Let's look at what we know first. Well, we had an April to May bull channel, which broke out on the downside 3 weeks ago, reaching its target roughly in line with the mid-April low and the July 2012 support at 663.70. There was also not a weekly key reversal up in London sugar as there was in New York sugar 2 weeks ago. I'll explain why I think this happened in my commentary on New York sugar. Then we move over to the possibilities of what may be happening. We have a possible late April, mid-May bearish shift picture, one that has been breached on the lowest time, currently at 669.80, but not broken, and it seems to have repaired itself. The market is currently in between the middle time below, currently at 692.5, and the upper time above, currently 715.20. As I said last week, I am not in love with this pitchfork, not yet, but it is there. And for the moment, I'll leave it as the dominant short-term pattern. Then we have 2 big patterns, a possible 3 peaks and domed house pattern and a possible rounded top pattern. For the 3 peaks and domed house pattern, this is a rare but large pattern, and as a consequence, though I see elements of it here, I'm not happy about this being a true pattern. I'll leave it at that until I see further evidence. For the rounded top pattern, well, this has seen a greater chance and opportunity, especially with the break higher last Friday, the second day in a 2-day bullish separating lines pattern, and also today's action, even if today looks a little indecisive right now. Thus we'd have to see if firstly the market makes it to the mid-May high at 726.90 and what it does there. I suppose you could call in the highs of May around the 720 areas at a punch, but I'd like, or pinch even, but I'd like to see that true break above the 726.90 area to be sure, and to start looking at potential targets for such a pattern, topside. It would also open up the possibility of the action since mid-March today being either a bullish halfway hesitation or a double top, even an even Adam type top. In the meantime, I will repeat my words on a rounded top pattern from last week, and I quote, "Whilst it's too early for such a pattern to have been executed, I can give an idea of the potentials for such a pattern. Thus, for a confirmed break higher, the primary move would be about $39 on top of the break, with a secondary harder to reach move of about $67. For a confirmed break lower, the primary move would be about $9.50 below a break, with a secondary harder to reach move of about $67. It's still too early for these patterns, but I thought you should know just in case." And that's the end of the quote. Sugar white premium spread. We are far into 2023 and this chart continues to be one of the busiest charts I have and one of the most colourful. Many things are going on, all at the same time. Okay, so I've previously spoken about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart. The market at the moment in between the lower time below, currently 101 3/4, and the middle time above, currently 176 even. I've said this so many times before and I'll repeat it again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle attack of this market. Next we have an ascending expanding wedge pattern highlighted in bright red trend lines and above the market, the current market. This was formed between mid-April to late November last year and is currently 184.5 to right off the top of my weekly chart. To me it was, and still is, not the best looking of such wedge patterns, but is also still out there, despite being tested as recently as mid-April this year. And it comes with all the possibilities such a pattern invokes. The most recent activity had been the market's move up through the slowly rising long moving average, currently 131.5. Followed by a move back down and all the way through the slowly rising medium moving average, currently 125.25. This action pushed down through the two 50% Fibonacci lines at 128 3/4 and 131.5, and the June 2020 high at 134, much as if they weren't even there. The medium moving average managed to hold up the market for 1 week, but we're pushing down through it, below it again. 2 weeks ago I was wondering if perhaps a bullish pitchfork for the August 2021 to February 2023 action might be on the cards. Last week I drew a bullish Andrews and bullish shift pitchfork for the same movement. I have not highlighted them, either of them, as it neither adds nor subtracts from the current patterns, or current action even. I might look next time to draw a bearish pitchfork of some description to muddy the waters even further for the mid-September 2022 to mid-April 2023 action. But I'll see how prices treat the bullish pitchforks first. One final point, and it is another big picture item I've mentioned last week, is to look at the whole 2022 to date action as a possible huge lopsided diamond pattern. Last week I just lodged that idea in my own and your mind, as there are elements of such a pattern here. There seemed to be enough going on elsewhere that I didn't wish to unnecessarily add to the mess of lines we already have. However, I've decided to go ahead and draw this potential diamond top pattern here, which you can see highlighted in dark green. As you can see, prices have broken out of the bottom of this pattern, though it's not really been confirmed as yet. However, I can give you an idea of the potentials for a break lower should this become confirmed in the next week or so, and if we don't have a false break, which is very important. Thus a primary move would be about $94.25 with a secondary, harder to reach move of about $149.50. Let's just say for the moment that the secondary one is not an option, as it would be below zero, which is a hugely unlikely possibility. Even the primary one would be a huge move, but I'll just leave it at that for the moment. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.